Let's start with a hard truth. Most people living in the United States will work for 30, maybe even 40 years, paying rent every single month, and still never truly own the place they live in. The most painful part? Many of them actually could have bought a home. They didn't because they were lazy or poor, but because they never understood how the U.S. home buying system really works. Today, I want to change that. I'm going to break down the entire process, step by step, to show you that homeownership in America is within your reach. First, let's bust a huge myth. Buying a home in the USA is not just for the rich. It's not only for people with perfect credit, and it is definitely not only for people born in this country. Immigrants, first-time buyers, and average working families buy homes in America every single day. They do it by following a clear, legal, and structured process. The U.S. real estate system is designed to be transparent and rule-based. Everything happens through written contracts with licensed real estate agents and through government-regulated banks. This system is built on fairness. Most homes for sale are listed on what's called the Multiple Listing Service, or MLS. This is a massive shared database that makes pricing public and transparent, so you can see what homes are selling for in your area. Unlike in many other countries where verbal promises or handshake deals might carry weight, here they mean absolutely nothing. In American real estate, if it's not in writing, it simply doesn't exist. This protects both you, the buyer, and the seller. Every detail, every promise, every negotiation is documented. So, where do you begin? The most important step, long before you even look at a single house online, is financial preparation. Think of this as building your foundation. It all starts with your credit score. Your credit score is essentially your financial reputation in the United States. It tells lenders how reliable you are with money. A score of 620 or higher is generally the minimum you need to qualify for a home loan. But the higher your score, the better. A strong credit score can literally save you tens of thousands of dollars in interest over the life of your loan. If your score isn't there yet, don't worry. There are proven ways to improve it, like paying your bills on time and keeping your credit card balances low. Next up is income verification. Lenders need to see that you have a stable and reliable income to make your monthly mortgage payments. This usually means providing documents like job offer letters, recent pay stubs, and your tax returns, typically for the last 2 years. They want to see a consistent history of employment and earnings. This isn't about judging your profession, it's about confirming your ability to handle the financial responsibility of a mortgage. And then, there's savings. You'll need money for 3 key things: the down payment, closing costs, and an emergency fund. Now, let's talk about the down payment, because this is where another huge myth lives. You do not always need 20% down to buy a home. That's a myth that stops so many people before they even start. While a larger down payment can lower your monthly payments, there are fantastic loan programs that require much, much less. This brings us to mortgages. Very few people buy a home with cash. Most people in the USA use a mortgage, which is simply a loan from a bank to buy a house. There are several different types of mortgages, and it's crucial to know which one might be right for you. There are conventional loans, which are a common option. Then there are FHA loans, which are backed by the government and are fantastic for first-time buyers. They can allow you to buy a home with as little as 3.5% down. For military members and veterans, there are VA loans, which often require 0 down payment. That's right, 0. And for certain rural areas, there are USDA loans, which can also offer a 0 down option. These mortgages are usually for a term of 15 or 30 years. A 30-year mortgage will give you a lower monthly payment, while a 15-year mortgage will help you pay off your home faster and save a lot on interest. The goal isn't just to buy a house, it's to buy it smart, in a way that fits your financial life. Now, before you get excited and start scheduling home tours, there is one critical step you must take. Get pre-approved for a loan. A pre-approval is not the same as a pre-qualification. A pre-approval means a lender has thoroughly reviewed your credit, your income, your assets, and your debt. Based on that deep dive, they give you a letter stating the exact amount they are willing to lend you. This letter is your golden ticket. It transforms you from a casual window shopper into a serious, qualified buyer in the eyes of sellers. It also gives you a clear, realistic budget. which saves you an incredible amount of time and emotional stress by ensuring you're only looking at homes you can genuinely afford. Once you have that pre-approval letter in hand, the fun part begins: house hunting. This is where you partner with a licensed real estate agent. A good agent is your guide, your advocate, and your expert negotiator. They will help you find homes that match your criteria, take you to view them, and provide insights into neighborhoods, schools, and local market trends. They will help you analyze prices and compare properties to ensure you're making a sound investment. When you find the home that just feels right, it's time to make an offer. Your agent will help you draft a written offer that includes the price you're willing to pay, the amount of your earnest money deposit, which shows you're serious, and any contingencies. Contingencies are conditions that must be met for the sale to go through, like a satisfactory home inspection and your ability to secure final loan approval. Negotiation is a normal and expected part of the process. The seller might accept your offer, reject it, or come back with a counteroffer. Your agent will guide you through these negotiations. After your offer is accepted, you enter the escrow or under contract period. This is typically a 30 to 45-day window where several important things happen simultaneously. You'll schedule a professional home inspection to check for any hidden problems with the property's structure, plumbing, or electrical systems. Meanwhile, the lender will order an appraisal to make sure the home is worth the price UVA agreed to pay. Your loan file goes into final underwriting, where the bank does its last checks, and all the legal documents are prepared by a title company or an attorney. Finally, the big day arrives: closing day. This is when you'll sit down and sign a mountain of paperwork. It can feel a bit overwhelming, but each document is just formalizing the agreement. On this day, you'll pay your remaining down payment and closing costs. Once everything is signed and the funds are transferred, you will receive the keys to your new home. In that moment, you officially become a homeowner. That moment is more than just a transaction. It's a fundamental shift in your financial future. You stop paying rent, which builds someone else's wealth, and you start making mortgage payments, which build your own equity and your own future. Rent is a cycle that can keep you stuck. Ownership creates stability, wealth, and a sense of belonging. Knowledge creates opportunity. Buying a home in the USA is not about luck or privilege. It's about understanding the system, preparing yourself financially, and taking strategic action. And if they can do it, then so can you. Thank you for watching, and I hope this empowers you to take the first step on your journey to homeownership. Don't forget to like and subscribe for more tips on building your future.